welcome to another weekly recap for EU. Shock. Being honest with you guys, last week I didn't really trade. I literally took one trade, which I'm about to go through. And I just basically I didn't have the week off. I was doing other bits and bobs, but I also just didn't really see anything that was that beautiful. Missed a couple of trades at the beginning of the week. Just had other things going on. And you know what? That's completely normal. Like, that happens as part of trading, and I think it's a good thing to be able to take yourself out for almost a week, not freak out, not be fearful of, oh my God, what opportunities have I missed and all this. The week before I did 18%. It's pretty much my month done. So I didn't have to do anything, and I'm trying to get really, really disciplined in that, not forcing things, waiting for the good stuff. And if I don't feel in the mood to trade, which to be honest last week I didn't, then I won't trade. It's really important to identify your emotions and how you're feeling and kind of be in touch with yourself. I didn't say touch yourself, be in touch with yourself to understand, how you're feeling, how your emotions feel. Because, if you've had a bad day or you've woken up, you're tired, or you've had a row with your partner, or the kids are doing your head in, or something stressed you out at work, or whatever it is, 9 times out of 10, if you come into trading with those thoughts, you'll take it out on trading. And unfortunately, trading's not a punch bag, and it will humble the shit out of you. Probably make you rethink your entire life if you try and go at trading with aggression. So it's usually not a good idea to trade. I just took the week off. Had loads of bits and bobs going on. It was quite nice, to be honest. Obviously, I was still very present. I still did my routine. I didn't take the week off in the sense of, I'm not doing anything. I was still doing everything I would normally do, still doing my end of day markups, still monitoring the charts through my session, still doing all the usual. I just didn't hit any buttons, didn't execute anything. And then on the Friday, I saw a setup and I was present and I was like, oh, I quite like this. Took it and I took a break even. So last week for me was literally a break even. Lost a little bit on comms. So I guess you could say it was a minus week. And just wanted to share that with you because I think it's really important, that you guys understand that that's completely normal. It happens. It was out of my own choice, and I just have to be at peace with the outcome. Not sit there when I did my end of day markups and my weekly ASR and go, oh my God, there was so much. There was. I think what was valid for me that I logged, there was about 90% last week. And obviously I know a lot of you caught that, which is incredible. I'm not saying I didn't trade because it was just a shit week. I just didn't feel like trading. Sometimes try it, see how you go. Even if it's a day, sometimes a week off can kind of just make you feel a little bit better. I feel much better today. And yeah, I'm looking forward to the week. But I will only trade if something presents that makes sense, that fits the plan. And if I'm here, if I'm not here, I'm not going to rush back to whatever I'm doing to come and take a trade. Trading works for me. It's not the other way around. I do this for freedom. I didn't do this and leave work and all these other things to become a slave to a screen, to stare at a chart every second of the day and blow my head up with, screen time. I did it to be able to go and do whatever I want when I want. Earn good money, yes, but I'm also now at that point on my journey where I understand that good money can be earned from a couple of days trading a month and not from every single day. And I'm not saying don't trade every day, and I'm not saying you need to be the same. But it all goes back to understanding why you're actually trading. What do you want from it? And I know I say it a lot, and I say it on most recaps, and I say it in Discord all the time. But it's because until you actually figure that out, you're not going to know what kind of trader you want to be, and you're not going to know essentially what you're doing it for. Most people come into it because they see it as money. It's like crypto at the moment and NFTs, right? Everyone from your mum, your dad, your nan, your dog, your dog's dog, and your cat round the corner know about it. Usually that's not a good sign. It means it's becoming a little bit too popular, and everyone's kind of jumping into crypto. Don't get me wrong, if you're educated on it and you understand it, by all means. But everyone's jumping into it thinking they're going to become the next millionaire because they heard that, John round the corner bought an NFT a year ago or whatever, and he's now a millionaire. Or, you got Steve down the local, Steve the Geezer. He's like, yeah, mate, bought Bitcoin when it was a penny, and now I'm driving around in 25 McLarens. So people just assume that, oh, that's going to make me rich. And, it's like, if you miss that original part of things, you need to educate yourself. Yes, you can make money from it, 1,000,000%, but you need to learn how. And I think trading has that same impact. When you first come into it, you see people making big money, and unfortunately you see all the dumb stuff on YouTube and Instagram, and it draws you in. Money's quite a toxic thing, and I think that if you can't control it and actually understand there's more to life than simply money, then you do fall in a rabbit hole. And look, I've been there. I'm just speaking from experience with you guys. And I know a lot of you say that you love these little waffles. That's literally why I do it. I want to share. I want to be honest. And just be genuine and transparent. When I originally first got into trading, as you all know, there was none of that, mate. It was just, give me 50 quid, mate. I'll make it $1 million tomorrow. And then you wake up and you've got no money left, It was chaos. And obviously us at Phantom, we're trying to guide you guys to the right path and sort of have the right expectations without actually setting major expectations. And also, just it's amazing to see how many of you last week alone were passing funding. I think we were having like 2-3 a day, which is absolutely mad. Seeing the consistency from you guys and the hard work, knowing that the hard work that we're putting in and the time and effort we're giving up to help, to see it actually paying off is incredible. And some of the messages we get and the stories we hear, like, it really, really, really is so satisfying, and it really fills you with a lot of gratitude that you're able to be in a position to help others. So, I know it might sound boring when we say stuff, or it might sound like maybe we're trying to slow you down or hold you back. We're not. We're just trying to get you on the right path, because if you do it right, you do it once. If you don't, then you're going to do it a lot of times. That concludes this week's waffle. I'm sure there'll be some more in a minute, but yeah. Like I said, I don't plan these. I literally record my screen and just go. So last week, EU just kept dying. This was Friday. It was a London session. And basically, I was looking at it and I was like, okay, what have we got going on, down here? So if we just go on the 4 hour, we can see that, we're pretty bearish, right? We took out this low. We're just following on from strong highs, standard stuff. So when we were up here, this is a strong high. Why? Because it breaks that low. What do we want to do with a strong high? We want to trade away from it. Notice how it also takes out this liquidity here, creates a future mitigation, right? So when price, breaks out this low, what do we normally get? We get a pullback. So where's the level we want to be looking at this? Now, I'll be honest, looking back at that from last week, the best play with that probably would have just been to do something like that. 9 pips. And just target the low. Oh, look. Nearly 10%. It couldn't be that easy. Like, I did a video on the H4 stuff. When they're that small, and it is literally the extreme, so worth putting a trade on it. Even though you might be like, 9 pips, nah, mate. Go down to the 15, see if you can refine it. Maybe you can make this stop 4.5 or something. But sometimes that's just the easier way of doing it. You set that at the beginning of the week. Your week's done, mate, by here. So in a day, you're done. You don't even have to worry. And if you really, really, have got confidence, then now you're running at 17% trade. And realistically, price should come back into somewhere within here. And then we should see either these levels here or potentially these guys. We should see shorts come off those levels. If we're going to continue short, obviously we have been falling out the sky. We have just hit this sell to buy that caused that impulsive push, which reacted to this guy. So we could see, look at that, nearly straight. We could see a pullback here, no doubt about it, right? And obviously in my head, I was thinking, all right, well, let me just draw this bad boy on. I hope me doing this on my Mac is helping you guys. I know it's not as wide and whatnot, but it should be better quality and hopefully you see more. So obviously we hit this daily, right? So in my head, I was thinking, okay, well, we could see a pullback. We could be looking at pullbacks into the bottom of this 4 hour range. So there's definitely potential for a pullback. I went on the 15 minute and then I just sort of waited to see what happened. Let me get rid of this because that's taking up my screen. So obviously we hit this daily, and then from here we've literally just, put in new low, new low, new low, right? So at that point in time, I was like, okay, well, this is the low that got taken out there. And then you can track back. You could use something here. You could use this guy here, right? Either way, it's the same outcome. Okay, this is a much nicer high to await to fail because we are playing a reversal here. You could have played something here by all means if you did. It's not wrong, so don't freak out. That's how I'd have had it sort of for chalk, because each one of these candles made a new low. I keep seeing people question this. You know, it's very simple. If we're just making new lows and each candle is actually trading below one another, i.e. the wicks of each candle, just like that one, that one, that one, that one, and that one, if they're all trading at new lows, then there can't be a pullback within this unless it pulls back without breaking the low and then breaks the low. Then that's chalk. But until it does that, it's really important to pay attention to the wicks, because I see a lot of people at the moment going, oh, but that's chalked here, for instance, and it hasn't. Yeah, all right, it might have worked here, but there'll be a number of times where it won't work. Here's a good example: new low, new low, new low, new low, pull back, then we put in a new low. Okay, so you can go, oh, look, there's a chalk there. We took the low. We failed to take the high at that point in time. Then we took out this low, and then we chalked, we took out the high. But you wouldn't want to trade off of this. Why? Because it's not in anything. It's not hit anything valid. And this is why we say only use chalk when it's actually in a level or an area of interest that makes sense, i.e. this daily. So once we had the chalk, I was like, okay, well, I like this. This demand basically essentially caused that big push. And also I was looking at it and going, right, well, this got mitigated there, this got mitigated there, this got mitigated there. This didn't have a mitigation, right? This nice sell to buy hadn't had a mitigation. So in my head, I was thinking, you know what? It makes sense for this to potentially give us a pullback. Mindful that there is levels such as this, these buy to sells, which reacted to this demand flip. So we could reach this, right? But when I looked at it, I just looked at what we had hit and I was like, well, we didn't really hit anything. We broke above those and we just hit imbalance. Now, I won't trade off of that. Yes, you could go on the 1M and make more sense, but realistically, I like to see a 15-minute level. So in my head, I was thinking, well, I could, because pullbacks are a lot harder to play. They're a lot more corrective. And depending whether you're in at the actual, at the bottom, they can be harder to maintain a deeper pullback, right? So this would be a level where I was thinking we could target, or at least this high. My initial target was we should take out that high because it didn't mitigate anything specific, and so far it's failed to do its job. So I was like, okay, cool. Again, remember, I'm counter trend here. This is a lot riskier play. Okay, this level I was looking for shorts from as well. I would have happily hedged because it's still a very valid level, and I did think we could have another mitigation into the daily. We still could, right? So that was literally how I was seeing things. You can go on the 5M, you can see that, you've got this nice 5 minutes, so you could refine it if you want to this guy here. And again, you can go on the 5 minute and see it's not hit anything, right? We can go on the 1 minute just to double check. And also imbalance, right? So there was nothing hit, so I was quite confident the high would get run. Now again, when you're playing these complex pullbacks, they are harder to trade because it doesn't just trend, it will mitigate numerous times. Obviously looking at this, I was seeing that, okay, well, we've had mitigation of this, we've just had a mitigation of that, this swept that low, then we had this little chalk, we mitigated this, and off we went, right? Now this was a little bit out of my hours, this was like 7:14, I won't trade till 7:30. So yes, this is completely valid. Here, there wasn't a clean flip, to be honest. It did just change character, so it probably didn't fit my plan anyway, so I wouldn't have taken it. But all I was doing then is going, right, well, it's now come into the 15 minute. I've awaited the chalk, right? I've waited. I haven't got in before chalk because you can get smashed. So now I'm like, okay, well, I'm ready to trade. So, standard stuff. So this was a supply zone. I just refined it to the cleaner level. We had our chalk here. We had our chalk here, and obviously we had this reaction. It comes down, we mitigate this here. So I'm like, okay, well, I'm not trading this yet because for me there's been no valid flip. I'm not looking at trading off of these wicks. That normally results in me getting my ass handed to me. I want to wait for the clean stuff, right? This buy to sell broke this low, we then pulled back. Yes, we mitigated it once, and then from here we just had a clean push, right? New low, new low, new low. So there was no real supply level here. I'm not about forcing it anymore because, like I always say, it's like a fart. If you force it, you're going to shit your pants, and if you're wearing Action Man pants or Space Invader pants, it ain't cool if you shit them. Do you know what I mean? They're a rare thing nowadays. So I'm still waiting for this, and there's no change of character for me at all yet. Right, each one of these make a new low, so I'm not going to trade that. Now, if you had a risk entry off of this guy, Cool. You could have said, this is my reaction to this here, pushed, mitigates off. Now, you know, this isn't really a valid supply because it didn't take out a low. So I wouldn't be trading off that risk entry. I'll be waiting for the setup. So just play it on. I then mark this up, noticing that we get this kind of whole reaction again to this original reaction. So I'm like, okay, well, we're building liquidity here. We are also building it here, and we're kind of forming that wedge like this. So, you know, it's like, well, if we take the high, likely we'll come back, we'll get a mitigation. But then if that fails to breach this high, the likelihood is this has been built. Why? To get run. So that's where, again, sometimes management in a trade, you need to be like, you know what? It's not moving very well. I'm not liking this. I'm going to get out or whatever. So there we go. Right, so we break that. And that's a really clean change of character, really clean flip. And obviously you can see here we had original flip, pulled back. We then tried again, pulled back, and then we've broken, right? Now, at this point in time, it's not a tricky one, but it's like, well, this is the sell candle before the buy. Then you have this little wick that obviously takes out this low here. So you could say, well, that wick is my POI, right? Or you could play this whole sell to buy, right? This guy here. Now, I would just grab that because it's almost the same entry as just playing the wick. Oh, what am I doing? Tell you what, this channel thing, mate, sometimes does my head in. So this sell to buy here, right, is pretty much the same as playing just this wick. And it gives you a little bit more room, and I would probably play the open, and I would have a 2-pip stop. So I'd be like that. And in theory, it shouldn't break this low. If it breaks this, then I'm wrong. I get taken out and whatever. Framing it up to the high, as I always say, I won't trade unless there is at least a 1 to 5 reward. And there's a 1 to 5, but it's got to take the high. So that's my idea framed up. Okay, you know, you've got your V shape here. You've got your V shape here, you've got your mitigations, you're starting to see bullish order flow, you've got your failure of supply, you've got your change of character, right? As prices come in, it's taken out some liquidity, not as much as I would have liked, just, you know, it's taken out these little 1 minute lows. If you go on the 15 minute though, it is a very clean push, and you will find a lot of the time with the 15 minute, when it's really clean and it comes back, it ends up using the POI as inducement. Happens quite a lot, but I was happy to take the risk here, and once you say that, you got to accept whatever happens. So play this on. So there, you get tagged in. You get a nice reaction, then it mucked about, and I thought, oh, I'm getting taken out. Sweet, you know, I'd rather it just ping me out than faff. And then it did another candle like that, and I'm thinking I'm going to sit in drawdown for the next however long. Someone would come to my door during a recap, wouldn't they? Bear with me 1 second, guys. I'm not even editing that out because that is just part of daily life, and that is how it is. And I hope some of you are laughing. It's happened to me on a podcast and now a recap, but I am not editing that because it's just natural. It happens. These things aren't planned. I'm just rolling with it. So, so it was doing that. It was sitting about, and I was thinking, oh, you know what? It's probably going to take me out, whatever. Now, when you look at this, right, if you go over all the trades that work, not many of them do this and build this kind of liquidity like that, right? They tend to come in, V out, do that, and they're normally off, right? And, you know, when I got tagged in and saw that, I was like, okay, well, my BE's here. So as long as I can get my risk off, I'm going to be honest, if it starts to come up here, get my risk off, comes back down here and starts doing this, very rare will I just close it here, because it can just go. As long as risk's off, I'll just accept that if it takes me for a B, it takes me for a B. So I play it on, get a real nice reaction, right? I went BE and I was like, cool, you know what, this is going to go. Just what you want to see when you've sat in drawdown for about 4 or 5 minutes, right? And then we got a little bit of a pullback. We started reacting to some of these supply levels. Now, as always, you got this guy right at the top. Now, ooh, was it yellow? What you don't expect, realistically, if it's the right trade, it shouldn't react to this much. It should react, pull back, and take it out. So once we did that, we got near it. pulled back, and I was like, oh, we're just mitigating the top of this sell to buy. It's all good. We're going to go. And then it come in quite deep, and I was like, all right. Then we got this push, and we got this reaction here. Obviously, I'm looking at this before I realistically, because it was Friday, being honest with you guys, and I hadn't taken a trade, probably would have pulled a hell of a lot here, or just took it, because for me, 5% still a chunk of wedge. And it would have just been a nice way to finish a week where I hadn't really traded. At the same time, I won't take any less than that 1 to 5. I mean, at this point, it sounds silly, but it was 1 to 4.7. 1 to 5 was there. Once you take off comms and spread, it's like 1 to 4 and a bit. So, you know, I wanted the high to go. That was the end of that. We had another mitigation, and then we sold off, and yeah, she just went. And I was like, oh, well, I'm BE. And that's how it goes. You know, it come up, it mitigated this guy, and it wanted to see lower prices. Will I change my plan? Absolutely not. Does it make me think I should have done something different? No, not really, because I stuck to my rules. And I know that these rules, over a period of a week, a month, a quarter, a year, will find me and keep me consistent. If I start to adjust things here and go, oh, you know what? Next time I'm just going to target the POI at the high. Well, now I can't even get in the trade because there's not enough risk reward for me to even put risk on the table. Because you have to remember, right? Like, getting into the market comes with a risk, because you can incur slippage. You could incur a news event you're not aware about, or something goes on in the world where you put that risk on thinking you're risking 1% and you could end up losing 4 or 5%. It happens. So for me to get into the market, there needs to be a benefit. I'm not into playing a pullback into this to playing some kind of short hedge. That's just not how I trade. For me, if you're going to go long here and then short here in the space of 10 pips, it kind of shows me you just don't back your analysis. And it also will incur a loss, because a pointless loss as well, because there's many times where this will just rip. I'm not taking a sell there just for banter because I'm nervous about my long. I back myself. On this occasion, we got BE, and I was more than happy to lose 100 odd quid on comms and get my BE, and that was kind of me shutting out Friday and the rest of the week. I was done. I monitored New York. I monitored the rest of London, and I took my end of day markups, and I looked over on the weekend, and to be honest with you, I was happy with what I did. Does it come back in lower? Yes, it does. You know, I know some people might have looked at this, and this is something we say a lot. When you've got liquidity building up like this, yes, order flow does generate liquidity, right? But rather than leaving a risk entry on this guy, play the reaction to it. So wait for it to come back in and wait for it to set up again. Because at this point in time, when we took out that high and we took out that low, right, we went bearish on the M1. So for price to come back here, it's gone bearish. So you don't want to be just sitting there with a risk entry. Oh, there's 100 lots, mate. Cheers. Because it could just sweep it and then go. So it's best to play the reaction. Yes, more conservative, but again, it's about being sensible. If this was the second mitigation, like this one, it's fine. But go over your data. Once you've had 1 mitigation, 2 mitigation, sometimes that third mitigation, if it's failing to break these highs, and it's counter trend, may I add, not pro. When you're pro, you can probably get 4, 5, 6 mitigations. When you're counter, and we're trying to play a pullback, it's so much harder to trade. And obviously when you've got levels below you, it may want to come deeper. That's just how it goes, right? So at this point in time, you know, it took me out. Yeah, all good. That concludes this week's recap. I know there might not be any major source in it, but you have to remember that every week we say the same thing, because that is the true source. There is no new source. It's simply refining and getting yourself to that discipline point in trading and that plan that you know will keep you consistent, and then it's just about executing it over and over again. That point there, I executed my plan. I'm happy with the outcome. If I didn't execute my plan and I took a break even or a loss, or I didn't secure those profits, I'd probably be a lot more emotional, because my head would be like, well, that wasn't even part of your plan. Why are you in that? What are you doing? That's when there's a problem. So yeah, I hope that helps. As always, you know, there's going to be probably another 3 or 4 recaps come out over the next few days. Just ensure that you are taking in what you're watching. Maybe pick a coach or a member that you want to follow and just follow their stuff. We all trade it the same. We just have essentially our own spin on it, maybe our own management rules, somewhat our own entry ruling. the way we see things can be a little bit different. So by all means, all these videos that are dropping, just ensure that you are actually tuning into them, because there's tons of value in there. Above all else, make sure you have an incredible week. Smash it. Be patient, be disciplined, be professional, and work on understanding that why. Like, why do you want to trade? Because I'm telling you, once you figure it out, there's so much more that kind of opens up, and you realize that the skill that you've learned and that you're learning is absolutely incredible what it can do. So don't get greedy and think it's going to disappear in a week or a month, and stop looking at people that have made multiple billions off of random things and thinking that needs to be you or that's the norm, because it's not. It's a business. And if you set up any business, or any of you are business owners, you'll know that the first year, or even second and third year, you might not make much profit. Fourth year, fifth year, you'll make 6 figures plus. And it'll be like, oh, it was worth it. It's the same with trading. It is worth it. Keep going. You've got this. Let's smash it. Have an incredible week. Peace and love, homies.